All right, let me say hello and welcome to each and every one of you. Doug here with the LincolnList.com, and today we're going to be talking about why this market is setting you up for something big. Now, before we get started, don't forget, for all you active intraday traders out there, each day that the market is open, we are trading live for market commentary and live trading. So I'll post the link here on the screen. Each and every one of you are welcome to join us. Also, I've mentioned recently that I know that intraday active day trading isn't for everyone for time constraints, so maybe that's just not your thing. For those of you that are interested in more of investing momentum or short-term trading, focusing on maybe 4 to 5 great trading opportunities a week, we do have a part-time trader program up over 70% year to date. I'll post a link for that. It might fit you a little bit better. So no matter what kind of trader you are, the Lincoln List can help. So I want to talk to you about something here that I feel is important to everyone, because I know a lot of traders often feel that the market has random moves in it and things happen many times that are unexplainable. And that can be true, but a lot of the times the market will leave us around clues on what its next moves are. And it's important for all of us to understand this, because the traders that stick around for a long time and make the most amount of money are the ones that can forecast what is going to happen next at the highest probability. I mean, none of us can read the future. We don't know that. But for those that are able to act accordingly and read the signs that what the market's always trying to tell us, are going to be the ones that stick around. The ones that are blind, naive, or one-trick ponies are never really going to have long-term successful trading careers. That's just the way it is. You have to be thinking ahead, and you have to be one step ahead of everyone else. And this normally goes for just about anything in life, because if you think about people who normally buy real estate when? At the highest possible price, at the wrong time. They're the ones that buy Bitcoins at 20,000. The people that invest in the stock market when it's at all-time highs. And these aren't necessarily the best time to start initiating new investments or taking on new types of assets. And that's normally where investors and traders go wrong, is it's never really the idea about something as much as it is the execution and the entry on that idea. So I kind of want to talk to you about that, because the market it sometimes seems like it just does something off the wall, but it always leaves around clues and crumbs for all of us. And I think we're seeing this right here. And the action over the last couple of days is leading me to think we're headed in some specific direction here. Now, I'll give you an example of what I'm talking about. If you look at this recent rally that we had in August, this is how the market has always notoriously sucked people in and screwed them over. You get this impression that the market goes up every day, and it was. That the dip always get bought, and it was. And what this does is it's sort of like bull market hypnotism. It just gets people into FOMO, where they feel they're going to miss out, and they stop thinking rationally. They stop using risk profiles, and they just start throwing money at everything because, number one, it's not hurting them, and they're making money doing that, and they're confusing luck for skill, and they're just haphazardly jumping into this thinking it's always going to continue like this and it's never going to correct. And we saw that. The market was just going up every day for several weeks, and it just draws people in, draws more money in, gets everybody complacent, and then what happens is this monster dump that we had when this correction started. It took 2 days to wipe out an entire month. Now, a lot of people say, hey, that's all, stocks take the staircase up and elevator down, and for some degree that's true. But the thing about it is, it didn't come out of nowhere. If you've traded for any length of time, you would realize that what was happening in August was abnormal. And as the market was going up, real traders, consistent, professional, profitable traders, were pulling money out of the market, not adding to it. And that's always how the whole investing cycle works. It's like pros start pulling money out while investors, amateur investors, are chasing. Then when the whole thing corrects, who gets stuck holding the bag like a game of musical chairs? It's the amateurs. You have to learn to be on the other side of that. So that's when the market becomes more of a risk off. It's to reduce your exposure, because the correction will come and it will be so quick and catch everyone off guard that it's usually magnified in its range. That's what you saw. Now, I've done several topics before about how to trade through market corrections. But once a market corrects over 5%, it doesn't come back the next day. They never do that. They always spend about a month haggling themselves around, trying to figure out what the next direction is going to be. Now, this last move that we saw last week was starting to draw people back into that perception here that we're going to go back to all-time highs. You saw the NASDAQ do that, but the Dow and the SPY were lagging behind. They start to give you that impression that that's the direction that they're going to go. and they start pulling and pulling everybody in. And then the next thing you know, just quietly this time, rather than just knocking people out in 2 days, the last 4 days have just been the same type of hint. Now I want to switch to an intraday chart to show you guys what I'm talking about here. If you look at the last couple of days, the market's been throwing out this. You start thinking about this. When is the last time the market gapped down and sold? That was its first move. It's not doing that, right? In fact, every single day starts out like it's going to be bullish. So if you go back and you look at all the way through the chart, regardless of what the daily chart's telling you, the intraday action from the start has been the same. You're starting out with these strong rallies only to end the day with these monstrous flushes. So normally the first 1 hour of trading marks the high across the board for everyone. And you're seeing that how it happened on Friday, washing out really strong into the weekend. And then yesterday, washing out damn near all day. And here, as I'm doing this in the pre-market, again, it's doing the same type of a move. I'm going to highlight this move back here. Here's the pre-market move. It's doing the same kind of pre-market move, gap. And maybe we're in the same situation here today where we rip and then it draws people in only to sell off later. Now, here's the thing I want to talk about. What you're seeing different here is you're not seeing the standard aggressive dump on any of this stuff. It's more like a meltdown grind. And it's been a long time since we've had meltdown grinds going into the end of the day. So that's another kind of clue, is why is the market continuing to throw money out on the way towards the close? Is it something because nobody wants to hold positions overnight? You know, is that what it is? Is the stimulus program that much of an impact here on the market? I mean, nobody really knows for sure, but the market's trying to tell us something. What I'm trying to tell you is this stuff right here isn't going to continue. You know, at some point, if a rally doesn't stick, and here's what your clue is. I know a lot of people, you're going 4 or 5 days now straight selling. A panic. What you want to understand here is a panic buy situation is not out of the question. The panic buy situation creates more confusion for the amateur because it makes you feel like, okay, the worst is over. We're bouncing now. We're back to the all-time high. And I don't know, guys, if we don't see this, we don't see any real solid, committed, clean direction in any type of trading until after the election. I just think there's just too much going on with the stimulus, election, and all that stuff to really get the market to feel confident and solid as to what direction it wants to go. But for the short-term traders, what you've got to look at is the behavior. And that is, nothing is at the high of day. There's very few assets at high of day after the lunchtime session. From there on, everything's just smoking out and slowly selling. Now, why I started out with this by saying something big is going to be happening, because if this thing does not stick a rally, and I'm talking about a rally, I'm talking about 1 day. Maybe we rally today just out of panic, and then the next day we sell off. If you can't put 2 back-to-backs here real soon, and the market can't reclaim last week's high very soon, one of these drops that you will get over the next week prior to this election, or a couple of weeks before the election, won't be so subtle. It won't be so consistent or slow or moving. It will be an absolute like head chopper. Like it'll just come right out there and smoke people. So what does this mean to you, the trader? Since neither one of us know if it's going to go higher or lower, what am I trying to tell you? Where am I getting with all this shit? Here's what I'm trying to say. Your horizon right now as a trader, you are in a risk-off market. You are not engaging in longer, if you're an investor and you're going to hold for 20 years, fine, buy a bunch of stuff. If you're a shorter term trader, this is not the best time right now to execute positions. Why is that? Because you have volatility and you're switching directions rapidly. You're going from a bullish morning to an extremely bearish afternoon. You're running the risk of gap downs. You're running the risk of election results that maybe not be favorable, or you're having stimulus that might not get done. You're leaving yourself vulnerable to massive gap downs that are out of your control. And because of the whipsaw action in the market, it's difficult to put any real risk of assets on board. Can't do that right now because of the volatility. You can, but I think it's not something that everybody wants to do. So at some point, this has to stick. If you don't get any kind of response, back-to-back solid rallies here, you're probably going to see something that a lot of people don't like. It could get nasty. It could really, really break down heavily. So you are in a risk-off market. Your time horizon for trades and profits have gone from what it used to be like this to like this. You need to be even more narrowly focused on time and profits. Everything is shorter. So for me, I moved to smaller position sizes, quicker scalps. I don't leave any profits laying around in this market, because if you have some longs, you're looking good at the first hour, and you're collecting soup cans on the street at the close. Nobody wants to live that way. So think about that, guys. The market's leaving clues. We're in a situation right now where volatility is throwing people for a loop. It's confusing them. It's confusing even the best of people. And when you get confused, the best thing to do is slow it down. Slow it down, shorten your horizon, and take your little shots. You're in a risk-off market here, and every bounce is not necessarily the bounce to draw you into, okay, the worst is, the storm has passed. It's not like that. Look at the way look at the market's behavior. There's an awful lot of selling, especially late, and that's going to have to stop before any rally can be sustained. Anyway, I hope you liked the video. Don't forget, if you have any tips, comments, quarrels, curmudgeoning, or complaining, just send it to me, support@lincolnlist.com. Feel free to leave your comments down in the comment box. Until next time, take care. Trade well.